Hi everyone, welcome to this live weekly show. I was getting ready for the show. Sorry, I didn't know I was already live. Anyway, let's start as usual, but by taking a look at what the market is waiting for next week. This week, sorry. Of course, the focus is it's on the ECB meeting this Thursday, right? There's a lot of noise going on around the ECB this time because the market. I remember the last meeting in January when Draghi promised that they will review their quantitative easing or facilities program in March. Well, the market has been pricing in probably a 50 basis points rate cut in the deposit rate. I mean, ever since then, right? Unless last Friday we heard that the government council was discussing the possibility of what to do this meeting, and all of a sudden they were agreeing on a 10 basic point rate cut and nothing else. At least that's what they said, right? So all of a sudden, and alongside with a mixed non-farm payroll reports, we have the euro recovering the 110 region. I do believe that it was sort of a game that Draghi played on Friday, diminishing market expectations for the Thursday meeting, right? And I'm still believe that he has something up to his sleeve. Draghi tends to surprise the market. Draghi likes to make dramatic announcements. I do understand why the euro is stuck around 110 against the greenback, because there are a lot of uncertainties surrounding whatever he may said or may not. But one thing is clear is that if he just offered 10 basic point rate cut in deposit rate, it won't be enough, right? And that will be further the euro gains. However, if he shocks the market with a more I don't know, with extra measures, meaning probably that 15 basic point cut that we were talking at the beginning, or an extension in quantitative easing, something a bit unlikely but probable, then the euro will probably ease. They want a cheaper euro to boost consumption, to boost inflation. Manufacturing has been tepid, to say the least, these days. So overall, I believe that he wants the euro cheaper, right? But he won't get enough of that unless the Fed raises rates in the upcoming meeting. And as you may already know, all the tepid or poor US data lately has delayed chances or market speculation of a rate hike until the end of this year and early 2015. In that front, we have the Fed meeting the upcoming week, not this one. And there have been a lot of mixed signals ever since the December rate hike coming from Fed officers, because many had said that they are still on the path of rising rates 3 to 4 times this year. Yet at the same time, I believe it was Fisher, the one who said that economic conditions have changed ever since their December meeting, when they decided to lift rates for the first time. So the market is not sure what to do right now with the greenback also. But overall, as if you can take a look at your charts, the dollar remains weak. Anyway, I'm taking a look at the calendar. Give me a second. I will take a look at it also for you and what's next for this week. The fact is that today we have not much relevant data ideas. There's nothing coming on to hit the wires and something able to rock the market. So I do believe that the market will remain in wait and see mode, with the euro probably ranging right within last week range. I mean, for the rest of the day, okay. And for Friday, we have some industrial data coming from the UK. The fact is that mixed signals are also coming from the UK. The fears of a Brexit, as we discussed last week, in my opinion, were overextended, right? now the Bank of England is trying to soften that view or the probable chaos Brexit will mean. And they announced that it will fill the market with liquidity, the local market with liquidity around the date, and announcing litros and other measures for the end of June. Sorry, a lot of noise coming in. Give me a second. Okay, that's better. Anyway, I was talking about Bank of England and the pound. The fact is that now I believe that the Brexit fears should continue to ease, and therefore we're going to see the pound recovering even more ground. Uh, on Wednesday, late Wednesday, early Thursday, we have Bank of New Zealand interest rate decision. Uh, the fact is that the market is not waiting for a rate cut, as you may see, 2.5, 2.5. Uh, but both New Zealand and Canada both have their decisions on Wednesday. Uh, both countries may cut rates or announce any other easing measure, right? Because Canadian dollar has strengthened a lot lately, particularly due to oil recovering price. And the Reserve Bank of New Zealand can also announce a rate cut, most likely the New Zealand one, because the rates are higher. So beware of surprises in here that can rock a bit the market and take this both currencies lower, okay? At least as a first reaction, okay? China data. I have been watching China data lately, and it continues to be disappointing. We have spent most of January and February focusing on the economic slowdown that was coming in from China that could affect the rest of the world. Earlier today, we know terrible figures of a trade balance in China, with imports and exports terribly doubling expectations of a decline. Really bad data. We have also, oops, sorry, give me a second. Sorry for that interruption. Anyway, I would say over the weekend, China CAD's growth forecast for the upcoming for this year from 7% to 6.5% to 7%. So overall, those fears I'm saying and that dominate the fears of a global economic slowdown being a contagion coming from China that we have at the beginning of the year are still present, right? Are still in the background, and despite risk sentiment seem to have improved and stocks are slowly recovering ground, the fact is that I do believe that we are standing at the edge of a cliff and we can fall into risk aversion trading any second, and it will be big because the market right now it's like yeah, I'm not sure, right? But anytime if the data continues to disappoint, and we have disappointed data in other economies beyond um, China, sorry, then there's a good chance that the market will continue to trade in risk on mode, and therefore we are going to see a lot of things in the Japanese yen and gold particularly. Anyway, all of this came as on early Thursday. We have coming from China inflation figures, which should probably rock Asian markets. And of course, the main focus will be the ECB decision, which we have already discussed. For Friday, right? Inflation in Germany will come a bit too late because the one day after the ECB will have a little impact on the market, right? It tends to have a much more impact if before, right? But I believe that global trade balance in the UK is also big, right? And we will have Canadian payroll, right? It will affect CAD, but hardly affect the rest of the market. Anyway, give me a second. We will go to charts, which are far more interesting. And there we go. Okay, here we are. I believe that you are seeing my charts now. Yeah, you are. Okay. If you take a look at the euro dollar in the forward charts, you will find that around this 1050 region and where The pair currently stalled this week, and last Friday we have major reversal cases, right, from the last months of 2015 and early this month. I don't believe it's a critical resistance, but an even stronger one stands in the 1120, 1160 region, also coming from the past, right? And if to that analysis we add a Fibonacci retracement of this latest slump, we found that the 38.2 and the 61.8% retracements are in those regions. So I do believe that these levels will be critical ahead of ESB, as if we take back this 110.50 region and then manage to move beyond 111.60, right, the pair could rally back towards the 1460 region, past this year highs. 1460 is the bullish target for this week. Should we have a shockingly positive bullish news for this week or the next one, right? Depending on how the price moves these days. And the downside fact is that if we have really disappointing news in Europe, that really good ones in the US, and all of a sudden the dollar regains the upside, the 118 level, right, will probably continue to attract buying interest. I'm not seeing the pair breaking below this level unless we have really comfortable US data over the next couple of months and a rate hike in June. Something that honestly we are not really betting into much these days. Anyway, and for the short term, we have supports around 980, 990, right? And lows set yesterday around 940. Those are the main bearish targets, sorry, and 1045.50 is the immediate resistance above which the pair can rally to 110.90, 111.20, okay? Those are the levels I'm watching for today. For the pound, as I was saying, we have that long bearish movement, right? The small correction, and then the pair resuming its slide. There has been some upward correction. There are some signs of bottoming in here. I don't know if anyone feels comfortable with the pound below 140. So I'm not seeing much of a chances of a downward break below 140 for these days, even despite whatever the ECB may do or how the euro may react. The dollar is weakening. I'm not seeing much of a possibility of a strength in movement right now. So my take is that we can go higher up to 43.60 this week, right? We have an unfilled weekly opening up in there for a couple of weeks ago. So that's my main bullish target. I would like to see a break above yesterday's high, 42.80, right? And there's a good chance that even once above it, the pair could run towards this region. Anyway, I'm looking at my 4-hour charts, and as usual, it's 200 exponential moving average is a major resistance level. The price tends to struggle a lot around it until it finally breaks it, so it finally retrace. And since we are retracing a bit now, but I do believe that this small amount of pips is not enough to confirm that the moving average has rejected price and there's going to be further downwards moves. We have some lows and the 20 simple moving average around 41.90. So if we take that level, the pair could continue towards downside today. 41.30 region will be my next bearish target. And as I said, if above this high, then the bullish news will be more firmer, and we're going to rally up to 43.60. Okay. And the LC has been trading within an ascendant channel for ever since bottoming earlier this year below 70. So I do believe that the bullish trend is pretty clear in here, right? Supported by iron ore, gold, and commodities in general, and rising, and the fact that a rate hike in Australia has been put on hold. Okay, I don't believe that. Probably Australia is the country doing better these days. We have really good ratings in inflation, really good ratings in GDP. So overall, I do expect the USD to remain bullish. Okay, We have flirted with the roof of the channel yesterday, but retreat below it. However, approaches to the 74 level have been attracting my interest. So I still believe that the pair can go higher and break through 75. Right, in that case, there's a good 100 pips rally up to the upside in there. I'm seeing dips down to 73.70 intraday as probable buying opportunities, and if we break this level, then the risk of a further downward corrective move and test of the base of the channel during the upcoming days, right? And for the dollar Japanese yen, well, there's little to add to what we have been saying over the past couple of weeks, right? There is in fact a double bottom around 11, but the neckline, right, has been this high around 14, sorry, 86, and we have the 38.2% retracement of the latest decline, 20 pips above that level. And for me, the figure won't be complete and the figure won't be valid unless we recover above this level. Okay, so actually, it's not yet a clear figure. It's not completing, and even more, the pair is setting lower highs weekly basis, right? And it has broken below the 23.6% retracement today. Chinese trade balance figures had spurred risk aversion during the Asian trading hours. So the fact is that for me, the bears are still in the driver's seat in this particular pair, and we have an immediate support around 1270, right? Sorry, 1270 there. That could, if broken, could lead to a retest of this lows around 1210. Okay, if we lost that level, then I would expect further slides and a retest of this lows around 11. There's little chances of an upward move, to be honest. I do believe that the market is still taking advances as selling opportunities, and as I said, we need to clear this Fibonacci resistance to talk about a bullish dollar Japanese yen. Uh, uh, I don't see how that could happen over the upcoming days. Okay, as I said, it takes more than a swallow to make a summer. Uh, we need more than one positive figure in the years to talk about a bullish dollar. Okay, and there's not that's not the case. Okay, keep an eye on stocks. They have been rising lately. The market thinks they may have bottomed. Right, this is Dow Jones, not untraded, but it's a nice measure of sentiment. It has broken above its 200 simple moving average daily basis for the first time since early January. Right, January 3 to 1. Take a look at what happened this year. Started around the 200, plummeted, and it's now flirting with it. But as I said, the movement above it has been quite shy, and if we're back trading, the 200 is the brown, the 100 is the blue. If we trade back below the blue, that will mean risk aversion. It's back in form, and therefore stocks may fall and imply risk aversion, which will result in the euro, the gold, and euro rising clearly. Okay, and of course, commodity currencies will also be favored by risk sentiment. A color note for this week will be oil. Brent oil rose about 40 yesterday. Um, West Texas Intermediate US futures are up to their highest for the year. And the markets say, okay, a bottom has been made, right? Some relief is coming. But the fact is the background isn't changed. The background that triggered that huge decline over the past year and a half has not changed. There's a lot of talking coming from OPEC and non-OPEC oil producers, but they're not doing not much more than talking, right? That means that there's hopes that lift oil as this fast, right, could be as fast, even faster reversing, right? Particularly if they don't make an agreement of freezing production or production continues to rise, or I don't know, if some one country of the major producers decides to say something about not playing to the output freeze. Okay, beware of that. There is a meeting scheduled for March 20, I believe, among worldwide oil producers. So I do believe that there will be the key of what's the future of oil. But the poor exports and imports we had in China indeed are telling us that production continues to decline worldwide, and therefore demand for oil remains low. So I do believe that much of this rise has been speculative. Take a look, take care of that. Remember, if I take a look, I believe that 35 is the line in the sun. Okay, it's a psychological line in the sun. If we lost that level, well, back to downside. Okay, and gold trades at its highest also. It's flirting or approaching Friday's high. The market will be a bit cautious ahead of Fed next week. I do believe that despite still bullish, right? The movements could be limited, and even the commodity may decline in profit taking. Beware of that because ahead of the Fed and considering this huge rally we had ever since December, right? Many may rush to take profits out of the table ahead of the Fed meeting next week. And remember that if the Fed decides to rise rates, the gold will suffer big. But if the euro is benefited by Draghi, gold will be also okay this week, and we can go up to 13 or above. Okay. Anyway, that's it for today, guys. Thank you so much for being here with me. Hope you enjoyed and get something useful for this. See you back next week. Okay. Thank you and bye bye.